Stephen, I'm looking at Brent currently falling 1.7%, $74 a barrel. WTI at 70, down 1.8%. Is this all about recession? And will OPEC Plus ride to the rescue? Good news for inflation, not so good if you're trying to fill the coffers of the Saudis.
You know, I think there are a few reasons. You look at just clearly there is this fear that there will be a recession in the U.S. You know, this is ahead of the Fed meeting. There will be another interest rate hike, likely according to the analysts who are looking at this closely. And all this kind of pegs to a situation where perhaps there will be a slowdown. I think a lot of traders and folks want to get out of a risky position ahead of all of that. And so that's kind of leading to this drop in oil prices and the sell down. Looking more broadly, China could also be one factor that when you were looking at the market a few months ago, China's bounce back in demand and their reopening was one of those factors that a lot of folks were expecting to really boost prices and boost that consumption. But there have been some economic data coming out of China that perhaps shows that it's more of a mixed picture, and maybe that manufacturing isn't coming back as strong. Likewise, Russian oil production has been pretty strong as well. You've seen their exports still pretty high up there despite sanctions from Europe and other countries where I think a lot of the folks in the market expected perhaps a drawdown in Russian output that would tighten the market more. So the situation for the latter half of the year, the tightness seems to be easing to a degree, and in 2024 it's looking better as well. All of that kind of pointing to lower oil prices in the short term. How OPEC Plus will respond, it's still unclear, but their surprise cut that they made a few months ago or a few weeks back, those gains have already disappeared.